So welcome to the last part of this video, and I'm going to be covering the entry model. You can see I changed my chart color, but we're all good. So now talking about the entry model, we have three ways. That's three ways we can do it, and it's all basically on one perspective, which is called market structure. You get market structure. So the entry model is more like it actually looks like a daily range. It's it looks like a daily range, but it's not like, yeah, it's just on a lower time frame. So let me go over everything again. Let's say you spot your type 1 daily range, buy side, sell side. You get, you spot your type 1 daily range, and let's say this is your daily range, this is your 50%, and price gets here. You see your SMT. So now immediately you spot your SMT, what's the next step? The next step is for you to do what? To find confirmation. And what is the confirmation now? And one thing I did say, I don't know if I said it in the last class, is that when you are looking at for this SMT here, when you are looking for this SMT here, the session has to end. That's if it's an intraday SMT, it has to end first before you can find the confirmation. You get, the cycle has to end first before you find the confirmation. Now, what is the confirmation? What is the confirmation entry? The confirmation happens after you have seen the SMT. After what? You have seen the SMT. And it is all based on structure. I remember at the starting of this video, I said it was three types we were looking for. So let me mark the three types. It's all on structure. All on structure. So structure. So this is what we want to see. Structure, liquidity, and key level. The structure happens on the lower time frame, which is M5. The liquidity is spotted on that same time frame, which is M5. And we have three types of liquidity you can spot. Anyone that provides itself, that's the one you choose. So either structural liquidity, or engineered liquidity, or inducement liquidity. So now the key level, you find external key level on what? On H1. Good. So this is actually what you look for the confirmation. So now let me show you, let me give you an example or a part drawing of how it looks like. So the first thing we need to see after our SMT is your SMT. You have seen your SMT now and you're looking for an entry. This is what you need to see. You need to see liquidity sweep. That's liquidity sweep first, then a break of structure. That's for the confirmation. No, liquidity sweep. I remember I told you it almost looked like a type 1 daily range. Liquidity sweep and what? Break of structure. So means you are seeing this is firstly what? This is the structure we are looking for. Liquidity sweep, break of structure, and double break of structure. The double break of structure is not compulsory, but it's high probability. So immediately you have seen this, you know that yes, structure is in line. The next thing you should wait for after structure is what? Liquidity. And how does liquidity form? We have three types, which is structural, engineered, or what? Inducement. Now look at the structural liquidity. This is how it is. Price are giving you liquidity sweep, break of structure, double break of structure. Then price does a pullback after the break of structure, price does a pullback, then price gives you another break of structure. You get, this is structural liquidity. Price gives you another break of structure, then you can mark this high here as what? Your liquidity point. So this is what you want to see. You want to see price raid above structural liquidity, come and tap into your POI, which I will be talking about shortly, and what? Dish out. That is structural liquidity. Now this is one example. Remember, this is structural liquidity. It gives you another break of structure. Let me show you the other one. This structural. Then the second one, the first thing is your structure, which is liquidity sweep, break of structure on M5. On M5. Then this one now I want to tell you is called engineer liquidity. So this is what price will do. Price will pull back after the break of structure. Price will pull back and displace a bit, maybe creating a swing high or something. Displace a bit, but the displacement doesn't cause another break of structure. If it causes another break of structure, then it's already what? A structural liquidity. It doesn't cause another break of structure. So this is what price does. When you are seeing this, you can mark this as your liquidity zone, and do what? Price will come and take it out. Price will come and take engineer liquidity and go down. Remember, the difference between this one and this one, let me mark here well so that you can to look identical a bit. Okay, cool. The difference between this and this is that this one, it gives you a break of structure first before it pulls back and take the structural high, and this one, it doesn't give you a break of structure at this side. No break of structure before it pulls back and give you. So that's engineer liquidity. And the last one is called inducement liquidity. And I'll show you why. So the first thing, structure, go to sweep, break of structure. No, I think I'm getting it wrong now. So I think it's something like liquidity sweep, a little bit of pullback before the break of structure. Yeah, I think it's something like this. Make this higher. So now this is what happened. This is liquidity sweep, BOS, another BOS. Good. So now this is inducement liquidity, because on the lower time frame, let's say on M1, this will be a break of structure, and traders will love to put their orders here on this order block here. That's why we mark this place as what? Inducement liquidity. So basically, this inducement liquidity, the pullback happens before the break of structure. You get, the pullback happens before the break of structure, the major break of structures. So cool. Price will come then and take over and move. So this is the three types of liquidity. This is my entry model. The first one, structural liquidity. Price breaks structure first, comes back and does. Second one gives you structure. Price pulls back. It doesn't cause break of structure. Collect it and dish out. You get. So now that's for it. Then, before we spot examples, before we go to the chart, I would like to show you what an SNR level is. You should know what an SNR level is. Basically, I have to come to the chart here. This is an SNR level. This is an SNR level. All these are SNR levels. Open, close, an SNR level. These are SNR levels. These are SNR levels. So cool, that's an SNR level, but we'll be mainly using this on the H1 time frame. So without wasting further time, Let's go over to the chart and see it. And don't forget is whenever you have spotted this liquidity, you have to mark it out. And since it's a bearish example, you have to put in your SNR level on 1 hour here. Just the nearest SNR level above the liquidity, that's your entry. And entry, what is your stop loss? Your stop loss is at the liquidity sweep, or if you want to be more conservative, put it above the structural high. And your target, depending on the type of setup, either 50 DRT or daily range low or high. You can put your stop loss at liquidity sweep, very moderate. So now let's go over to M5 and see some examples. And I will not be using SMT for full setup today. Clear the chart. Alright, of this. Okay, cool. Now let's look for some valid examples on our entry model. Now I can see this liquidity sweep, break of structure. Yeah, price creates a swing high here, that it went up, came down, it didn't cause a break of structure, but this is our liquidity zone here. This is our liquidity zone here. And remember, we also have this right here, which is an inducement liquidity. You can see our price came and took it off. You get, this is M5 time frame. So let me find other better examples for you. Other better examples. Okay, cool. You can see this one over here. Price gave you a liquidity sweep, a break of structure, swing high, break. Okay, cool. After price gave us a break of structure, look at what happened. Price pull back. Price did a pullback and caused another what? Break of structure. So immediately you see this, you know that yes, this is what? Engineered liquidity, structural liquidity. So immediately you mark this as structural liquidity, go over to 1 hour time frame. Let's wait. You have to go over to 1 hour time frame and check for the SNR level close to the liquidity. All right, where is it? Where is the drawing now? Oh my god, where is this drawing now? I can't spot it. Oh my god, let's go over to the M5 again. This is really slow. Okay, cool. This is the first drawing and this is the second drawing. I think I'll put this long tool here to spot it easily. Now let's go over to 1 hour time frame. We are going to find the SNR level below that liquidity. All right, cool. It's over here. But I can't see anything. I can't see my drawings. Oh my god, I don't know what is this, but we are supposed to select an SNR level below what? Liquidity, and this is a valid SNR level we could have used. So let's check it out. Let's see. This is not the entry. That place you saw now was not the entry. My network is so bad. Okay, that was not the entry. I think the entry is down on the lower time frame. On the other time frame, sorry. So this one is also an example, a continuation entry, liquidity sweep again, break of structure. After the break of structure, price did a pullback, created a swing low here. That's what. This is engineered liquidity. Pullback, entry from an SNR level. So now let's go over to the SNR level. Remember, the SNR level must not be fresh. Must not be fresh. You know, fresh and unfresh levels. The SNR level must not be fresh at all costs. Okay, I can see my drawings here. I think this should be the liquidity sweep. And this is a valid SNR level, SBR, maybe RBS. So price snaps it. Oh my god. Okay. Where is it? LSPOS. I can't even see what I was drawing. This is that was a bad example. Okay. I think I should find more for you. I should find more. Liquidity sweep, break or structure. And one thing you should know is that you can even go lower to find entries. You can go lower on M3. But me, I love, okay, this is it. I love sticking with M5. So that's for the confirmation entry. The three types.